It's been about 3 months I've been waiting to do this video and really give my contribution to the velocity banking community and give an example of how I paid off an auto loan in just under 3 years when the original plan was to do it in about 6 years. So let's follow along and I'm gonna give you some real numbers and just show the powerful benefits of velocity banking and when you apply these principles to your real life. So just to start off, I want to give some disclosures because I think anytime you give a talk, anybody can get on YouTube, anybody can get on TV and just say anything. And just so you know that I'm not making this stuff up, that I am a real person. So just for disclosures, I am a licensed professional. I am licensed by the state of California, the Department of Insurance, to talk about certain financial products. Just for full disclosure, I am a business owner as well. I own a notary agency. I'm an author, and I'm also a course instructor and speaker. But none of those things have anything to do with me selling you anything today. I'm just sharing information. I'm not here to sell you or tell you about any specific products. But anytime you listen to somebody speak, I think it's important that they talk about their disclosures if they have any financial interests. So now that that's out of the way, how did I come into this information? How did I come across this knowledge? Well, in 2018, as you're going to see, that was a very special year. I actually came across this video. It's called How to Eliminate Any Loan, basically mortgages using velocity banking. And what caught my attention was you can pay off a mortgage, a 30-year mortgage, in 5 years. And if you look closely, this video is old videos, posted about 7 years ago. I've been using these velocity banking strategies, these techniques, for about 6 years. I've been refining my methods and honing my techniques for about 6 years. And I do consider myself a master at velocity banking, although I don't discuss it a ton on this channel. But I did come to this information from the velocity banking channel, which is ran by CJ Wallace. And I am in love with velocity banking. I owe this man a ton, a ton, a ton. So thank you, CJ, if you want to learn more about velocity banking. He is a person I would recommend. He is a person who I personally learned from. So, I mean, there are a lot of people who talk about it, but he's the person who I learned it from. And to me, he does the best job of explaining it. I think other people do a good job, but that's just my personal favorite. So the term velocity banking, if you've never heard of it, you've probably heard about Snowball, Avalanche methods, all these different methods of paying off debt. But velocity banking to me is the best one. The reason primarily is because you don't have to, as CJ says, you don't have to eat beans and rice. You don't have to relegate yourself to just living cheaply and cash stuffing, envelope stuffing, and doing all these things, budgeting and all that stuff. You can actually continue to use the money that you already have without having to go work 2, 3, 4, 5 different jobs. All you need to do is rethink the way you consider deposits and withdrawals and what he calls transfers. So to me, that is a great video to learn more about it. Again, 2018 was a very special year because I started doing velocity banking. It was also a year I bought my first house and I also got married. That year was so pivotal because all these things happened. I started to become a little bit more conscious and aware of my future and starting a family and buying a house and managing my finances. So I sought out the help of a financial advisor, which I have several financial advisors now, and I recommend you do the same. I think this information gets updated constantly, and this was like almost 6 years ago. So if you haven't had a chance to work with a financial advisor, I highly, highly recommend you do it. I would get as many as possible. So the whole idea of this video was to pay off a mortgage in 5 to 7 years. And I thought, well, a mortgage is just a loan. So if that principle works with a mortgage, then why wouldn't it work with an auto loan or a credit card loan or a student loan or any other type of debt? So as I was employing these strategies, I gained incredible amount of credit limits because I live by the velocity banking principles, and the credit card companies, they saw that I was using credit the way it was supposed to be used. As a result, I was offered these credit limits and all these offers. And as you're going to see, A balance transfer is what I took advantage of as I paid off this car with Market Fast. So April 2022, I had this Nissan Altima. I had it for about maybe 3 or 4 years, and those cars aren't very good. The engines, the transmissions, they have these CVT transmissions for all my car people out there. But if you're not a car person, don't worry about it. Anyway, they started breaking down, and I needed something more reliable, and not just the fact that it was I needed a new car, but I wanted to stabilize my expenses. So I traded the car in, and I used Carvana. I just sold the car to Carvana. I did it online. It's very simple. I really really like Carvana. Again, disclosures. I'm not paid by Carvana. I'm not paid by CJ. I'm not paid to endorse or sponsor anything. I'm just telling you what my experience was. But I really, really thought the process was very simple. I ended up getting a Toyota Camry, and here is, over the course of that April 2022 all the way to June or July 2024, so just a little bit over 2 years, I was never late on payments. And that's another benefit of using the velocity technique, is that you always are going to have access to money to pay for any of your expenses, any of your bills, without ever missing a payment. And as you know, your payment history is one of the biggest components of your credit score. It makes up about 35%. So it's heavily, heavily weighted. So you can't miss payments. You can't be late on payments. And as you can see, I was never late. I was always on time for this entire period. So what happened in July of 2024? What exactly happened? So as I was using these velocity principles and applying them in my daily life, the credit card companies, they noticed how efficient I was using these credit cards. And as a result, they were encouraging me to spend more money. And the way they do that is by offering you balance transfers. Now, as a velocity banker, as we know, we take advantage of the tools and some of these debt weapons that are available to us. So what I did was, after about 2 or 3 months, they had been advertising these balance transfers. Literally every week, every Thursday, in fact, I would get an email about, here's an offer for a balance transfer. And I told myself, I can pay off this car sooner if I got a credit limit increase. The car that I had would be capable of absorbing whatever is left of the car loan. So in other words, there was about $20,000 left in the car loan. If I can get this credit card limit up to enough to cover up this, to absorb this car loan, I'll take this balance transfer. And guess what happened? I went to Capital One, and I requested a credit limit increase, and I requested it for like 20. I think I did it for like 30,000. I went like above. I went over the top, and that's something that I would recommend. Now they didn't give me the whole 30,000, but what they did was they gave me enough that would eat up the remaining balance of the car loan. So on July 9th, literally like 2 months later, I got the Camry's balance to drop right below 21,000. So as you can see from the title, it started off around 29,000 and some change. And after about 2 years, I got it down to 21,000, and I then transferred that whole balance into the credit card. Now, what that did was it allowed me to pay off the card in one click of a button. So I became the owner of the car. That means I took possession of the pink slip, and now I control this asset, or some people consider it a liability, but that's neither here nor there. But I now control, I can now sell this vehicle if I wanted to, and I did not have to pay the dealership and deal with the interest payments that went along with that. So as you can see, here are the numbers of this balance transfer. As you know, if you've never done a balance transfer, there are fees associated with that. There is a balance transfer fee. So what I did was I took so this 20,000 is what was owed on the car loan. And you look at some of these other factors, it was for 12 months. So this started in July, and then it goes for a whole 12 months where there would be 0%. So that means every single payment I would make would be just knocking down the principal, knocking down the principal. And as you know, interest is based upon the principal. And if there's no principal, then there's no interest. So it was the goal to now pay this entire amount off in 12 months so that once it expires, I would not be subject to this 17% variable APR, which is the credit card uh, interest rate. So here is the updated credit report that you can see it was last reported on July 2028 when the balance transfer paid off the entire car loan. And you can see that when it was opened, and you can see the original terms of the car was 6 years, 72 months. And then you see the highest balance of the car, which is 29,840. And so now this is reporting on my credit report as being completely paid off. Now, let's look at the bank's original plan. When I first signed the contract with Carvana, the original loan amount was $29,840. The terms of the loan was 72 months at 8.8%. Now, keep in mind, I was doing a trade-in. Okay, I took my old Nissan and then I traded that in for the new Camry. So what I owed on the Nissan, they took that loan and then they paid off that loan and then they combined the two. So that's the reason why the original loan was about 29,000. So three things really got accomplished here. I got rid of this old loan, this bad debt. I took ownership of this vehicle with the pink slip, and then I also regained, and I'm going to show this in a second, some cash flow. But let's get back to this was the original bank's plan. I had a monthly payment of $535, and I had done this for 27 months. Just a little bit over 2 years. In that 27 months, paying $535 per month, I had spent a total of $14,445, and about $8,000 went to the principal. And we know that because the original loan was $29,000, and then by the time that I did the balance transfer, it was about $20,000. So just about $8,000 has just gone to principal while the rest of it was going to the interest. So now this was the bank's plan. But as you know, as velocity bankers, we don't go with the bank's plan. We go with our plan. We control the debt. So now with the balance transfer, there was a $21,000, $521 on the credit card. You might be asking yourself, now you have to pay this credit card. And isn't that worse than paying the car loan? Not exactly. See, this is the difference, and this is the lessons of understanding some of these financial concepts like velocity banking. And here's my Google Sheets where I essentially predicted the future, right? You can see what's going to be coming, so it's not a surprise. So now with this new 0% balance transfer, I have 12 months at 0%. This is remarkable. I have my monthly payment is no longer $535, but it's $3,000, as you can see in the very beginning, where it says under the column dump, my initial payments 3,036.0720 to be exact. And the reason why is because when I made the balance transfer, I actually had to. I went to pay for something and they didn't take American Express, and I had to use my Visa or this Visa Capital One card, so I had to pay for some $86. No problem though. What I did was I divided this 21,521 by 12, and I broke it down into nice even round numbers so that by the time the balance transfer term ends, which is again July of 2025, I will completely have paid this off. So every single month is 3,000, 3,000, 2,000, and then 1,000 for the remainder seven for the final 7 months. My plan saved me 33 months of interest and unnecessary payments. I get to pay it off 33 months faster. I regained that $535 cash flow, and 100% of my payments are going to the principal. So if you don't understand how the $535 cash flow was regained, don't worry about it. I'll briefly try to explain this, but I advise you to go listen to some of the CJ Velocity Banking videos where he talks about this. When you make these payments on these credit cards, you can still use this money, right? You make these payments, for example, the 3,000, the 2,000, the 1,000, 1,000. If I wanted to go out and buy groceries, buy gasoline, buy a gift, take a trip, pay some dues or pay a subscription, do anything, I can still use this money. And that's why this $535 cash flow was regained. It's no longer just leaving out of my checking account. It's actually going back into my credit card. And although I'm not under this column where it says purchases, although I'm not using the card anymore, I could, if I wanted to, I could. And that's why this $535 is regained cash flow. But instead of me spending it, the $535 is going to help, going towards helping to pay down this debt. Now I paid off completely in 12 months. And that's the beauty of velocity banking, and then how to pay off that entire debt in only 39 months. So the 24 months, or 27 months rather, that I had paid it, that I have already paid, and then the additional 12 months. So 27 plus 12 equals 39. And that's why in 39 months altogether, I will have completely paid off. So here are some of my closing thoughts. And these are some things that I noticed, just a few of the major points that I want to mention. Velocity banking is a lifesaver. I don't know how you feel about it. I know there's a lot of people who talk about velocity banking, but I always think that you should show real life examples when you talk about income, talk about money, because anybody can get on TV, anybody can make a YouTube channel and just say any old thing. But me, I want to be very clear and very transparent with what I do so that you can have the faith and the confidence to go out and do it for yourself. Velocity banking, I'm a big, firm believer in it, and I owe a lot to CJ. So I just want to give him his flowers right now. And like I say, I don't. He doesn't pay me. He doesn't owe me anything. But I just want to thank him for everything that he's contributed to this velocity banking community. Also, another thought: Americans are very comfortable with borrowing money at 17% and 30%, and that's basically credit cards. At the same time, we as Americans aren't very privy to some of the vehicles and some of the strategies that can earn us 17 and 30%, right? Instead, we kind of just settle for 1% in our checking accounts, maybe 4% in our high yield savings accounts. Sometimes people get stocks that returns 7%, but that's kind of rare. And sometimes the S&P 500 can return 11%, which is good, but people aren't very savvy and they don't understand it. But at the same time, they're comfortable with spending money, which is essentially credit cards, and borrowing at these rates. Well, what we do is help you to understand how to define out of control debt. And that way you can be more comfortable with reversing this number. You can earn this 17 to 30% instead of spending it or losing it. And you can start taking your debts and converting those into 0% rates, 0% debts, like I just demonstrated here. So, definition of out of control debt. What is the definition of out of control debt? There's a very important leader. His name is Guillermo Haro, and he talks about how to define out of control debt. And this is a question that I'll ask you. Well, definition of out of control debt is debt that does not have a payoff date. If you have debt that's scattered around several different cards, you have different interest rates, you pay minimum payments, there's no telling when that debt is going to be paid off. But when you give yourself a definite payoff date, like 12 months or 33 months, then that is a way to control debt and to give yourself your own payoff plan rather than just conforming to the bank's payoff plan, which is never going to be in your favor. And then lastly, if this information is relevant to you and you seek out these strategies to help you and your family get ahead, I would invite you to click the link below and feel free to reach out for complimentary personal financial strategies. These strategies are things that every person needs. If you have any new event in your life, maybe you have a new house, you have new plans, new babies, just got married, got a new job, any of these type of events that take place regularly in our lives, we constantly need to update our personal financial strategies, especially today, especially with the the advancement and the evolution of some of these technologies. So I would invite you to talk to someone. It does not have to be me, right? Just talk to somebody and get comfortable with discussing some of these financial strategies, because it's very fast how things can get updated and then you can be outdated just as quickly as that. So I hope this helped you guys. If you have any questions, leave it below. I'll check and read every single comment and I'll answer every single one. All right, guys, take care.